Welcome everyone to Tuesday, the 3rd of November. Of course, on the global calendar, the US elections is the biggest news. And what it means, whoever wins today's elections between the Republican candidate, President Trump, who is an incumbent, or Democratic President nominee, Joe Biden, will have implications for the developed, emerging, and frontier Africa. So we have quite a whole lot of grounds to cover from tomorrow moving forward, whoever wins, and then we'll come back and have a very thorough drill down on economy, business, trade, and the markets. But on the continent, I'm sure we have quite a whole lot to deal with, from the elections in Tanzania and the just concluded presidential elections also in Côte d'Ivoire, which Alassane Ouattara has won the third time. The opposition largely boycotted the elections. So it was a free win for the president of this very agro-research rich West African country and the largest French-speaking economy west of the Sahara. But let's check in with the markets as always. Let's check in with the equities markets. South African GSE roared more than 1% yesterday, nearly 2%, but the currency took a bit of a beating because there was a dollar resurgence. Kenya market, 0.5% in the green. Egyptian market softened 0.26% on the back of the earnings season that is coming through all around the world. Ivorian market, 1.28%, very solid positive. Stock market, the first trading day or so after the weekend election in which Alassane Ouattara got a third term at the polls. Nigerian market softened 0.17% despite the positive and sweet numbers from Dangote Sugar for 3 months and 9 months. And let's go to start with the East African market. Kakuzi, which is having trouble with some of the human rights abuses, has secured the former chairman of Safaricom, Nicholas Nganga, to be the chairman of the board of Kakuzi, where perhaps that will give the company a bit of a good showing in terms of governance. And Kenya's agri-tech startup Twiga gets 3.2 billion shillings from the IFC to support 300 farmers. That's one sweet music to my ears. And Tanzania's CRBD Bank operating profit 65.3 million Tanzania shillings in the third quarter. Access Bank in Rwanda, with the footprint headquarters in Nigeria, launched its own agency banking. Let me get Agnes to speak about this agri-tech startup. I'm sure this is the kind of thing, more of it we'll like to see on the continent.
Certainly, that's a great story coming out of East Africa. Twiga Foods has been a darling of many financial institutions. It's a B2B e-commerce platform which links farmers to markets, and they've done fairly well and really assuring farmers access to market, but also fair pricing. Okay, and so this injection by IFC is targeting farmers. It is interesting, and I think IFC is working closely with the local commercial bank, the Kenya Commercial Bank, to try and support farmers who are suppliers for Twiga Foods to be able to continue operating. So a great story, really a conversation we've had here, Boston, on the importance of finding affordable financing for farmers and SMEs, and that is what Twiga is doing. I think they're doing very well in a market where we see other fast-moving consumer goods struggling. We have a few supermarkets in Kenya struggling at the moment, while Twiga, which started predominantly with agriculture product, is now going to process products, which you'd find in supermarkets. An interesting startup that has had everybody, including the US Development Finance, the Germans, everybody is putting money in this. What happens is they see a success story and everybody wants to jump in there, which is good. Unfortunately, I haven't seen any financial injection from local private sector players or local commercial banks, but it's mostly the DFIs from the West, like IFC, KWF, DFC, and many others who have really supported this innovation, because it touched to that important agriculture, access to finance and access to market. So a good one, as you said, is music to most of our ears this morning,
Yes, it
where
is.
financing is hard to come by, to
I
see
agree with you.
this company being able to attract funding. Another story is on Kakuzi that has been on the headlines for a couple of weeks, really bringing in Africans to the board. I mean, a little bit too late for them to do this. Look, it's a local company with 50% stake owned by Camellia, which is a UK-based company. They have dealt with this issue on human rights abuses very poorly, and Ali has spoken on this topic largely here. But bringing in an African to the board, and apart from this chap, they brought in other people. There is a billionaire called John Kibuga,
John,
who
yes.
actually grew in these quarter farms and has 32% stake in Kakuzi, and they had initially rejected him to join the board, but because of the spat with the local community, they seem to be now opening up to Africans running the board. And I think this Boston speaks to a larger story. Look, yes, it's good to have investment into the continent, but they have to respect the standards. They have to use the same standards that they would apply back at home. But at the same time, they have to work with the local communities. Look, somebody who has 32 stake in a farm should have a seat on the board. And in the past, they had completely rejected his attempt to join the board. And perhaps if they had this chap on a decision-making platform, they wouldn't be where they are right now. I'm sure they've lost quite a bit of money with supermarket like Tesco's, Aldi stopping supplies of avocado unless they resolve this issue on human rights. So a good story, but a little bit too late. They're just really trying whatever they can to try and resolve the crisis
Well,
between them.
yeah, but at least they got someone who was a former chairman of Safaricom, a company well respected in Kenya. So I'm sure they were very careful in picking who's going to be the front.
Look, consumers are becoming very informed, and if there's a human rights issue in any product, consumers will reach. It doesn't matter who you bring on board. Okay, and obviously this last minute gesture by Kakuzi is an attempt to reassure the suppliers and the local stakeholders, but I do not think. I think international corporations should really be careful and understanding the local market before they operate. I think it's a little bit too late. I'm not excited. I'm not excited because he's a former chairman of Safaricom, a well-respected company. No, this is a last-minute attempt to try and appease people who are angry with the way they have behaved, where farmers and people have been killed, and it's a little bit too late.
That's a red line. What would have crossed the red line already?
Absolutely.
They crossed the red line in the sand, and that is the point. They will have to, the company will have to catch cold for doing that. And with the global supply chain and all issues about human rights and all of that around the world, you can't take women, children, life, human rights issues very likely anywhere in the world. And being an international company and your products are all over the world in developed markets, more importantly, is got to be very, very careful. Let's touch on Nigerian markets and West Africa very closely. Of course, I'm sure Agnes will speak a little bit what you're looking at the political footprint from the Tanzania elections to the one in Ivory Coast. But let's talk about Dangote Sugar, which grabs my attention. This is a company whose revenue surged 54.6%. Net profits massive for third quarter and for the 9 months of this year. I think everybody just sat back at home during the lockdown and consuming everything that's got sugar, whether tea, pastries, whatever for kids, and everything. To a large extent, the Dangote Sugar is the one smiling right now. Ghana, the parliament approved the budget which was presented last week by Ken Oforiatta, who is the country's finance minister, for 27.4 billion Ghanaian cedis for Q1 2021. Oracom has been clarifying the sale of its majority stake, which led to the suspension of the company being traded on the BRVM in Ivory Coast. They're trying to sort that issue out very quickly so that they can get their listing, the suspension lifted by the stock exchange, BRVM. EcoBank in Ivory Coast, that's the EcoBank Côte d'Ivoire, they reported 27% rise in net income to about 22.8 billion CFA franc in third quarter. And Congo DRC is auctioning $12.5 million treasury bills today. This country is looking more inward to raise funds rather than externally. So let's touch on sugar very quickly, Chima.
Thank you very much, Bryson. Looking at Dangote Sugar's numbers, it looks like you said, everybody sat at home and we're consuming everything sugar. But I think that looking at their numbers, if we look at the year-on-year performance, we can see that for Q3, it's a 54.6% rise from their Q3 19 performance. Dangote Sugar has had a very sweet year, if I may say, from Q1. From the beginning of Q1, we've been seeing very significantly improved numbers. I would think that it is because of the low base from last year. Low base meaning that we are seeing much more improved market share, given the restrictions to borders, to the land borders, and the quelling of smuggled and cheaper sugar, imported sugar. So Dangote Sugar, as well as flour mills, for that matter, but I think mostly Dangote Sugar, they've been able to grow their market share considerably, and they've been able to leverage on the favorable trade controls and to grow their revenue significantly. However, when you look down the income statement, we can see that there was some pressure to gross margins. It reduced by about 3% year on year. I think we can account for that from the FX volatilities we've seen. So although Dangote Sugar has really tried to improve its backward integration program, consolidating and merging with Savannah Sugar, having several other local producing sugar subsidiaries, it still is kind of exposed to foreign exchange volatilities in terms of raw sugar importation. So it still has to deal with, it still has to source for foreign exchange in that market. And given all that has happened in that market, it's not a surprise that we're seeing what is happening to its gross margins. But when we go down, the same also happened for OPEX. I think OPEX stayed largely stable, increasing slightly, but this also giving the impact to gross margins. We saw that this also affected EBIT margins significantly. But one very surprising thing for us and a very positive factor for Dangote Sugar is the increase in PAT. We saw a very substantial increase in PAT from about I think Q3 PAT was 15 billion, which took 9 months PAT to 26 billion, coming from about 14 billion in the previous year, which is a very significant 12 billion increase. It's a testament to the very positive year they've had so far, but also in Q3, we saw that the company recognized a tax credit of about 3 billion. It's not very clear why they recognized the tax credit, because they made a profit, obviously, but we will be looking into that, and if there are further details, we'll get back to the FAR community.
Yes, thank you so much. Well, just a quick one still on Dangote Sugar. Saw that the cost of sales was significant, about 126 billion. Whatever that means, if you're making a top line revenue of about 160 billion and you spend about 126 billion in terms of cost of sales, that is massive.
I agree with you completely. I think it is very significant. It's something that the company will still need to look into in terms if they need or things they need to preserve margins. A lot of cost flows, a lot of cost pressures really come from the input costs. So it's something that companies have really taken upon themselves as something important to work on. And we can see that as many of these companies engage in backward integration programs. And like I said before, Dangote Sugar has also tried to engage in some of these backward integration programs. But given the bans of food and the FX volatilities and shortages we've been seeing over the course of this year, I think it is quite expected that we would see such huge input cost numbers. Excuse me. So I think that we may still continue to see such pressure on margins depending on how the FX market continues to play out, which it doesn't look like it will be stalling anytime soon. We'll still continue to see FX volatilities and shortages. So I think for the rest of the year, we'll still continue to see elevated input cost numbers for the firm. But however, I think that Dangote Sugar has continued on the right track especially when we are looking at their profit numbers.
Okay, let's leave it there for today. And maybe down the next few days or next week, we'll look at this cost of sales or so for some of the consumer goods and begin to see if there's a trend within the industry in which you make so much revenue, but then costs of sales also begin to eat very deep into your into the bottom line. On the financial statements. I'm getting a bit worried there. If your revenue comes in strong double digit, but your net profit is down to just triple digit to double digit, I'm wondering what happens to the middle level. Where did all the money go? So, but again, we'll spend time about that later. Let's go to Southern Africa, where the stock market yesterday was the strongest. But again, the strongest numbers for PMI also came from South Africa. It looks like the South Africans are just back in business after the level 2 lockdown, moved to level 1 lockdown easing by President Ramaphosa. The PMI just increased to 60.9 reading. That was massive from 58.5. Employment index about 49.1 reading. Fuel prices will go down today in South Africa. I wish that happens in Nigeria, 1.8% from tomorrow, November the 3rd. I wish I could just drive down to Johannesburg and fill up my car and drive back to Lagos. I don't know if that will make any sense. I don't think so, but I just wish. Gold is has had a very sweet year when it comes to the price of the bullion. Anglo Gold is doubling its dividend right now. I wish I have shares in Anglo Gold and others. I'm sure, Agnes, you wish the same too.
I do.
I don't know if you do.
not
double dividend.
Well, for the dividend, yes, but I'm all sustainable and impact investing, not in Anglo Gold. I know they have some issues. So any company that has some issues on operation, I will not put my money or invest in anyway. But interesting, you're right. South Africans seem to be back to business, as you said. It's still very difficult terrain as they try and navigate out of an economy that is absolutely struggling. But this news on oil prices down from today will be welcome for a lot of South Africans who've been struggling for a while. And this is partly contributed to the strength in the rand, the uncertainty with the US election. Obviously, the dollar is strained, the pound sterling too, with Brexit and another news of a second lockdown or a lockdown starting on Thursday. So that's, of course, gives some weight to the rand, hence the prices going down and also low oil prices. So certainly interesting news for South Africans. And if you can drive to South Africa and fill your car, please go ahead. And I'm sure Stephen, a lot of other Kenyans will be wanting to do that. But I guess this is quite good for them, for the consumers who have really struggled in the last couple of months.
Just a quick one, Agnes, as the second wave of lockdowns coming through in Europe and in the UK as well. How are you folks in diaspora feeling this? What are your thoughts and all of that? What are you planning? How are you going to feel this and all of that? Bring us up onto that.
So the uncertainty, obviously, fueled by the U.S. election, uncertainty of a second lockdown in across Europe, obviously is challenging for a lot of, not just for the diasporans, but a lot of companies in this part of the world. But also, I must say, this will impact directly on Africa's economy. We're very interdependent on investment from both the U.S. and Europe. So if there is a strain, investors will be holding back any plans to invest as they look to see how the market will behave in the next coming months. Certainly there is uncertainty. As everybody else, is preparation and obviously taking precautions, and really we've seen a lot of lack of leadership across Europe, particularly in Britain, where leaders don't know when they're coming or going. So there's a lack of that decisiveness on which businesses want to be able to plan how long is this lockdown going to last for, and what is there any replay, if any, for businesses. Where can businesses sort of seek support in case they need to, obviously, to keep workers working and to ensure that productivity continues. So certainly uncertain times for us, but when the goings get tough, you gotta get tougher and prepare. But absolutely would not be the same as we saw the first lockdown, March through August. It's not going to be as tough, but for businesses across Europe, it is such uncertain times, and my concern is this will impact directly on Africa's economy, because investors who would rather invest in the continent would now hold their money closely as they wait and see. So again, a wait and see situation as we look forward to the US elections, as everybody else is, and see what that happens.
I know I was getting worried because I know for countries like Kenya, Europe is one of its major destinations for its tea, for its horticulture, flowers, and a whole lot of that. And it's going to be a very tough one for agro exports heading into Europe. But perhaps things will, folks in lockdown will continue to take coffee from East Africa. They'll take cocoa and whatever beverages from Ivory Coast, from Ghana, cocoa exports from Nigeria. We hope the supply chain for agro commodities and horticulture and all of that, including banana, whatever, from Cameroon and all that, will continue to get into Europe and will help African producers, farmers, and others to remain in business as well, at least get everybody through this winter.
Thank you.
That is just around the corner.
Thank you, Bossen. But interestingly, when you say that, when you talk of the Kenyan teas, Russia and Pakistan are really one of the largest markets for Kenyan tea, and obviously overtaking Europe, which is quite interesting. So an importance of African, especially in agriculture sector, to diversify our market, to look for markets within the region, really are dependent on this international market is not sustainable. So the second lockdown gives us an opportunity to seek for regional market as well as other markets out of Europe, so that we can continue ensuring that our farmers are able to get paid for their products.
I love that. I think we'll continue to look inwards. Chima, quick one. Thank you, Agnes. Just to ask Chima about when you look at South Africa's PMI at about 60.1, that looks like a red hot PMI. When you look at Nigeria's PMI for October, just about 49.4, still below 50. Do you think when we look at Dangote Sugar doing pretty well, flour mills doing well, do you think we should be a little bit optimistic that Nigeria's PMI could see a bit of a rebound in November and December, now that we are back from fully out in business right now? Schools, churches, everywhere is back in business. And then the protests are over, the violence have stopped over the protests and all of that. Do you think we should be looking at 50 for PMI for November?
Well, I think that we should definitely be optimistic for this month, given the expected openings of a lot more. I know that businesses have been opened over the past, I think, at least 2 months already, but given that in October we had about 2 weeks of interruptions to businesses, given the NSAS protest and vandalisms from hoodlums and the rest. So I think that would account for the 49.4, almost a 50 reading. So I think we should be optimistic, especially as you mentioned, given that for so many of the consumer goods companies, which is part of the manufacturing sector, we've been seeing a lot of positive results from many of these companies. So I think going into November, we should continue to see positive momentum, and I think that would affect the PMI reading for that month.
Yeah, again, it looks like everybody's going to be very busy towards the end of the year. I'm not sure anyone is taking any holiday anytime soon. Try to make whatever you can for the rest of the year before you wrap up. This is not a time for anybody in Nigeria to go on holiday. That I can assure you. Everybody's going to try and see whatever you can do. If you have inventories you want to sell, if you have raw materials that you haven't used, if your businesses have been affected by the protests or whatever, you want to see whatever you can make before the Christmas and New Year holidays. So I guess that will keep the businesses going for November and into December. I think it's a very unusual year that we have on our hands right now. Very unusual, because by now folks will be thinking of how am I going to take my leave, my holiday. But right now everybody want to get back to work first. Finally, this morning, let's touch on North Africa very quickly and look at the earnings from there, with the Egyptian Bank Misr setting to open a branch in Agnes' home country. Well, you better be ready for that. The Egyptians are here with the pharaonic banks, so you better be ready. I hope they're not coming with the pyramid here kind of thing, and then it's going to be a whole different kind of bank. The banking structure you have. Egyptian Development Bank got $15 million loan from Green for Growth Fund. That is good. There's another startup in Egypt. Brand2 got some US dollars Series A funding to grow its user base. And I love the Morocco's Agric Bank launching a new subsidiary. So Agnes, finally from you, looking forward to welcome the pharaohs.
Yes, certainly. I think this speaks of Kenya's financial market. I mean, you have Nigerian banks like Access Bank also looking to increase their foothold in this East African nation. Bank Misr has Islamic financial rate compliant component, and this is something we've seen growing in our market, particularly in East Africa, as we said, as our governments try to explore new sources of FDI. So they've tapped into Islamic finance and Islamic banking, and I think Egyptian bank coming into the market is just a trend. We've seen already other banks, Nigerian leading the team into our market, but it speaks of Kenya's attractiveness as a destination for regional businesses and international businesses. So that's interesting. Well, if they bring the pyramids, that's welcome too. We can also have some tourists coming too.
Yes, we're going to have some tourists. I'm going to come over and see what it looks like in Nairobi or Mombasa, wherever they set it up. Thank you so much, ladies. It's good to have you this morning. We got to let you go at this point. Thank you so much, Agnes Gitau, partner at GBS Africa, and of course here on Frontier Africa Report as well, and Vetiva Ukadike, consumer goods analyst at Vetiva Capital Management. Thank you so much. Have a great Tuesday. Make sure you get some sleep. It's going to be a whole lot of drama and fun today, tomorrow at the US elections. It's the biggest movie of the year. Just watch. We'll be right back. Thank you so much, everyone. Bye for now.